Hey YouTube, this is the Robinhood investor. Today I'm going to go over 3 stocks that I'm going to buy in July. Currently my portfolio has stocks and ETFs, but I'm trying to add more stocks, preferably a good balance between dividend paying stocks and high growth stocks. I prefer dividend stocks because dividends are a good way to generate passive income just for holding the shares. I'm a long-term investor, so if I do not sell any of my shares, the only way I can capitalize on the stocks in the short term is through dividend payments. The 3 stocks I'm going to review are dividend aristocrats, which means these are companies in the S&P 500 index that have increased dividends every single year for the last 25 years. Dividend aristocrats are large cap, blue chip companies from different sectors, but they all demonstrate a healthy balance between capital growth and dividend income. First stock I'm going to talk about is McDonald's, ticker symbol MCD. McDonald's is the world's largest restaurant chain by revenue in over 100 countries. The current price of McDonald's is $156.70. Market cap is $124 billion. PE ratio is 21 and forward PE ratio is 19, which is good considering the average is 25. All right, let's take a look at the performance. 1 week was down 3.87%. 1 month down 2%. 3 months down 0.36%. 1 year up 5.08%, and 5 years up 82.02%. The dividend yield is 2.58%, which means they are giving investors $4.04 per year or $1.01 per quarter. McDonald's continued to build on its momentum, marking 11 consecutive quarters of positive comparable sales and their 5th consecutive quarter of positive guest counts. Consolidated operating income increased due to growth in franchise margin dollars. Diluted earnings per share of $1.72 increased 17%. McDonald's also returned $2.5 billion to shareholders through share repurchases and dividends. Last year, McDonald's introduced the Velocity Growth Plan, which is helping them grow fast and in a clear, defined direction. The plan focuses on serving more customers more often by giving customers delicious food served quickly with an overall experience and value for the money that meets their rising expectation. The key pillars of the growth strategy are to retain, regain, and convert customers. McDonald's will retain customers they have by improving and extending areas of strength and focusing on breakfast and family occasions. They'll regain customers they lost by improving taste and quality of food, enhancing convenience, and offering strong value. They'll convert casual customers to more committed customers with coffee and snacks. McDonald's also identified 3 accelerators to drive growth. They'll use digital to reshape interactions with the customer, whether they eat in, take out, drive-through, or delivery. They'll use delivery to bring the McDonald's experience to more customers in their homes, dorm rooms, workplaces, and beyond. Last but not least, they'll elevate customer experience in restaurants through technology and restaurant teams who bring it to life. With that said, I think McDonald's is doing a really good job engaging its customer base by using technology and adding new menu items that cater to a broader range of customers. Next topic I'm going to talk about is 3M, ticker symbol MMM. 3M produces more than 55,000 products and has operations in more than 65 countries. Their products are available for purchase through distributors, retailers, and online directly from the company. The current price of 3M is $196.72. 1 week performance was up 0.38%. 1 month down 1.02%. 3 months down 9.17%, 1 year down 4.1%, and 5 years down up 98.57%. The market cap is $117 billion. P ratio is 24 and forward P ratio is 17, which is good considering the average is 25. The dividend yield is 2.77%, which means they're giving investors $5.44 per year or $1.36 per quarter. The dividend yield increased by 16%, and this is the 60th consecutive year of annual increases. In Q1 2018, 3M sales of $8.3 billion were up 7.7% year over year. The earnings per share of $2.50 were up 15.7% year over year. Operating margin of 23% was up 0.3% year over year. GAAP EPS of 98 cents was down 55%. Including impact from TCJA, measurement, adjustment, and legal settlement, operating income of $1 billion was down 42%. 3M also returned $1.7 billion to shareholders via dividends and share repurchases. The company is broken down into 4 product categories: industrial, safety and graphics, healthcare, electronic and energy, and consumer. The industrial category sales grew year over year, led by abrasives, automotive, and aerospace, and industrial adhesives and tapes. The safety and graphics category sales grew year over year, led by personal safety, commercial solutions, and roofing granules. The healthcare category sales grew year over year, led by food safety, health information systems, and medical consumables. The electronics category sales grew year over year, led by electronics material solutions. The consumer category sales grew, led by home improvement and care. To summarize, 3M has steady growth overall in the different product categories, and they're all bringing in steady revenue growth. The third stock I'm going to talk about is Johnson & Johnson, ticker symbol J&J. Johnson & Johnson is a medical devices, pharmaceutical, and consumer packaged goods manufacturing company. It's a component of the Dow Jones Industrial Average and includes over 250 subsidiaries with operations in 60 countries and products sold in over 175 countries. The current price of J&J is $121.65. Market cap is $326 billion, PE ratio is 22, and forward PE ratio is 14, which is good considering the average is 25. All right, let's take a look at the performance. 1 week, down 0.97%. 1 month, up 1.05%. 3 months, down 4.12%. 1 year, down 6.09%. In 5 years, up 58.58%. The dividend yield is 2.97%, which means they are giving investors $3.60 per year or 90 cents per quarter. Overall sales worldwide increased by 12.6%. Consumer sales increased by 5.3%, driven by new products and geographic expansion. Pharmaceutical sales increased by 19.4%, driven by strong performance in oncology and international sales, and medical devices sales increased by 7.5%, driven by continued strong product performance in vision care and interventional solution. In terms of region, international sales grew by 19.9%, with the most growth in Europe, Asia Pacific, and Africa growing over 20%. So overall, Johnson & Johnson, 3M, and McDonald's are solid dividend plays with steady growth. The dividends have been increased for at least 25 years, and all 3 companies are large cap companies, which is what I like in my portfolio. So that's all for this video. What are your thoughts on Johnson & Johnson, 3M, and McDonald's? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to the channel. See you in the next video.